Okay, folks, here we are again. It is Monday evening, December 5th, 2022. Looking at the support and resistance levels that I like to call my power zones. And you can see where they had impact today. The daily balance zone, you can see here is the blue. Held price up, right? This is last night. We came here, meander, and it was held up here, combined with the weekly balance zone. But we ultimately made our way across, right, as we came into the day here. And 9:30 we kicked off, right? Opening time in the U.S. Tried to bounce clearly, but then continued to sell off. Down. Came down, hit the daily low power zone, bounced right back up to the underside of both of these balance zones. Sideways, nope, can't do it. Down we go again, and then we started to work our way through the daily low power zone until we got down here to the weekly low power zone, right? And then we started to feel a little bit of the resistance, or excuse me, the support, right? Buyers starting to come in because they were tired of it continuing to go down, right? And ultimately, if you look at it here, you got your uh, real buy signal on the 15-minute anyway, right here, right? Now, I suspect there was a pretty good, once you had your context there, I suspect there was a pretty good entry on the 5-minute. Let's take a look and see here. I was done already. I had made my money over here on this rally, back up toward here. Um, but look at that. That's an even better buy signal, right? Right here. And I say better because the difference between the high and the low, right? And if you're using this as your entry signal, the difference between the high and the low, plus a tick on each side, is the size of your stop, right? So the smaller you can make that, the better. And in fact, folks, you know what? Here's something that you should know. Here's a secret that you should know that I don't tell a lot of people. The real reason that people get into day trading is not for, well, the ones who are profitable. It's not for excitement. It's not for so that they can, trade and with their hair on fire. It's not for any of those things. It is so that they can trade a lower time frame, right? The lowest time frame they can possibly trade, which allows them to reduce their risk the most possible, right? Think about it. So if we took the trade here, right? Good looking trade. It's on the 15-minute, but the high of this candle is 39.96 and a quarter, and the low is 39.87 and a quarter, right? So 9 full points, right? 9 times 4, that's 36 ticks, right? At 12.50 each on a single contract, that's a rather expensive stop, right? Now, if we go back to just the 5-minute, right? Let's look at it on the 5-minute. And where were we with it? Right here, right? That's the best one right there, right? So if you had the patience and could wait for it, 39.92 to 39.87 and a quarter, right? Now look at, I mean, you basically halved your risk, right? Same trade, same context, but you reduced your risk by an extraordinary amount, right? So that's really the driving force. Look, it's certainly the reason that I went to day trading. I can't speak for everyone, but risk control, risk reduction, and risk management are the keys to trading. So anything that was going to put me in a situation where I could make my stops smaller was going to be better, right? Um, so that's it. That's today's lesson, as they say. Um, and these are your, resistance and support zones, and you can see how they worked out, and how using them, right, alongside the price action is really what can put money in your pocket, right? So that is it. Hopefully, this is helpful. I hope the secret helped you even more. And that's it. Any questions, feel free. Barring that, we'll see you next time, folks. Take care.